Hi, welcome to our introductory video on the stock market. This playlist is designed specifically for absolutely new beginners, people who have no idea what the market is, who haven't invested before. So what we're going to go over is what the stock market is, why should a person know about the market, what Nifty is, what Sensex is, what are the few brokers that we have in India, some of the jargon, and what a recession is, since that's what we're dealing with right now. So let's jump right in. What is the need to invest, or why should I know about the stock market? Long term money is to have your money work for you. None of us want to work till we're 50 or 60, right? So your money, whatever money you accumulate over your lifetime, has to give you returns. Now, as an example, over the past 20 years, the Indian markets on average have given returns of 11% every single year, right? So if you just bought some stocks, left it, did nothing, absolutely nothing, you didn't know what the stock market is, you didn't know what the companies are, but just left it would give you 11% returns. Now, this returns, as it is, they beat almost everything that you've heard of. Savings accounts, they usually give you returns of up to 2 or 3% depending on your account, right? Now, when it comes to fixed deposits, which are a very common form of investment in India, the returns that you get range from around 5 to 8%. So everything is dwarfed significantly by the stock market. So this is why, in order to grow long-term wealth, you almost have no other option. Either you grow your own business, either you run a business and then you grow it to a level where it generates income for you. But that is still an active form, right? You still have to take care of your business. There is no guarantee that it will keep running. You have no guarantee that a pandemic will happen and might shut it down. But with the stock market, you can be relatively short. Look at what's happening right now. Everything is shut down. We were in a pandemic recently. The entire country was in lockdown, but the stock market was still running. The stock market didn't take a single day off. So that shows you about the stability of the stock market. Actually is. The stock market is a place where you can buy and sell parts of companies. There are numerous companies which are listed on the stock market in various exchanges all around the world, and you can opt to buy or sell parts of those particular companies. So what happens is, suppose you own part of a company and the company does well. Suppose its annual report comes out and it has done well, it has made more profit than last time. Its share price could rise, and when its share price rises, you make profits. Market as well, something which everybody should be aware of. You can buy a part in a company and the company could perform poorly. So the price of that company could fall down, resulting in a loss as well. That is a risk you should be extremely mindful of. However, keep in mind that you choose when to sell the company. So suppose you have bought shares in Infosys, for example, and a bad result comes out. Its share price will probably fall and the value of investment will drop. However, it's up to you. Do you want to book the loss? If yes, you can sell the shares immediately and close out with whatever losses you have. However, you can even opt to hold on. Maybe what happens is the next year or after 2 years, the company does recover from its mistakes, and then you are now in a profit again. So it depends on you and when you decide to close your position. What the Sensex is. The Sensex is an index of stocks which tracks each and every listed company in India. So every company which is listed either on NSE or on BSE, they are a part of Sensex. Now, a confusion often arises between Nifty and Sensex. So Nifty is a collection of every single listed company in India, whereas Nifty is a collection of only the top 50 biggest companies in India. How big they are is decided based on their market capitalization, right? So how much, so the value of one share multiplied by the total number of shares. That's what they call market capitalization. The top 50 biggest companies make up Nifty. All the companies in India make up the Sensex. Now, for trading purposes and even for investing purposes, most people opt to look at Nifty because the 50 biggest companies in India, as with most markets in the world, they have a far greater impact and they show a more accurate picture of what's happening with the economy as compared to looking at everything altogether. Have a broker before you can buy shares in the stock market. So you need to have a demat account, and the most common way which people do it is by registering it through their brokerage firm itself. There are two main types of brokerage firms in India. One can be called full service brokers and the other can be called discount brokers. When it comes to full service brokers, this includes multiple benefits, including a relationship manager who's basically somebody you can talk to, somebody you can give recommendations, somebody who can help you out with what you're buying and selling. ICICI Bank, HDFC Bank, Axis Bank. So all these major banks do have their own full service brokers. However, they do charge you a much higher fee when it comes to buying or selling a share. There are obviously costs incurred when you buy or sell or have any transaction in the market, and full service brokers usually charge you a lot more. However, they do also offer you better customer service. So it is a bit of a give and take. If you are somebody who has a lot of capital, then and you want to play it safe, then it's probably best to go for a full service broker. However, if you have smaller account sizes, by smaller account size I mean anything less than 10 lakh, for example, then you can even opt for a discount broker. Discount brokers include Zerodha, 5 Paisa, Angel Broking, IIFL, etc. The thing about discount brokers is that they are very simple. They don't really offer you a relationship manager. They don't offer you exemplary customer service or anything. But what they do offer you are cheap rates. So if you are somebody who's trading and does make errors, since the brokerage cost is reduced, your margin of error is also slightly smaller. So which is why most people, especially most beginners, usually opt for discount brokers. That's it for right now. Hopefully this has made some concepts maybe slightly clearer. We do expect to go into far greater detail in upcoming videos. We'll probably move on to what the basics of technical analysis is, what some of the indicators are like VWAP, stochastic indicator, RSI, how they work, the fundamental analysis of stocks as well, how do you read a balance sheet, but all that is to come. So thank you.